On an unadjusted basis, the Eurozone current account surplus decreased sharply to €3.4 billion in May from €22 billion in April. So what does this mean for the Eurozone economy? Taking a look at the perspective of the peripheral pigs, I'm joined by Ben May, lead Eurozone economist with Oxford Economics. Ben, in a press conference last week, Mario Draghi noted that there are still headwinds lurking in the euro area. Did today's Eurozone current account give us enough of a clue about what's in store for the euro area economy as we attempt to move on from the Greek situation, or are there other indicators we should be looking out for?
Well, I think certainly there's been some, on balance over the last few months, there's been some reasonably encouraging trade data for the Eurozone. It seems really that trade growth has been picking up a little bit after a very weak start to the year. So I guess some encouragement can be drawn from that either perhaps some of the external weakness that we saw in Q1 is perhaps being unwound to a certain degree, or alternatively that the euro is really helping to insulate the Eurozone from that external weakness. So I think that certainly offers some hope that the recovery can broaden a bit as the sort of slowdown associated with the sort of erosion of the oil price boost fades.
As Greece attempts to rebuild its economy with the aid of last week's bailout, should it be encouraged to learn from the peripheral pigs? While there are similarities between Ireland, Spain and Portugal, will their roads back to economic growth spread to Greece?
Well, I think probably the situation is very different for Greece because it's it's a very different economy, say, from Ireland, and obviously it also similarly its problems are rather deeper and are going to be much more difficult to resolve. So whilst I guess the success of some of those countries, say particularly Spain, which has perhaps implemented some reforms and benefited from those, perhaps offer some hope. I think really the situation in Greece is pretty serious, and we're going to see certainly the hangover from all of the uncertainty over recent months and the introduction of capital controls means that certainly in the near term the economic situation there is going to be pretty nasty.
Is now the time for the Eurozone's focus to move on from Greece and rather look to Eurozone's real economy as a whole?
Whilst it's certainly the case that Greece has dominated the headlines over the last weeks and months, actually if you look at what's been going on in the Eurozone economy has been reasonably encouraging. So one thing to note is that probably, if anything, the recovery looks like it may have gained a little bit of momentum in Q2 relative to Q1. And whilst it's likely that household spending growth will weaken over the coming months as the sort of boost from lower oil price starts to fade, there is perhaps some signs that the recovery may well be broadening a bit. So some of the investment data has been quite encouraging, and also perhaps there's signs that export growth could pick up after a very weak start to the year. So I think really there are some grounds for optimism there that the Eurozone can stage a further period of pretty solid growth certainly by recent historical standards.
That's all from Ben May and myself for now. For more market analysis and insight like this, make sure you're tuning in to Dukescopy TV.